Hello, hi everyone. I want to welcome you especially to today's live trading session with me. Okay, so I trust that the one we had last week was helpful as we were able to probably see what I see in the market, learn a few things, and also be guided in your trading journey. And today, live again, and quickly gonna check our feedback, our audio feedback, just to see if the audio is good. Okay, so we are up to time today. Coming up live just before 1 p.m. just so that we can share out the links. Before it's past 1 p.m. Okay, so let's keep to time. Okay, because time is money, and so we can create more avenues to do other things. Okay, so right there where you are, go to the comment section once you join this video. Let me know where you're watching from. Okay, let me know how your trading experience has been. You could share with me your plans, your objectives for 2025. Okay, for many of us 2025 has already begun. If you're still planning to start 2025, then you're doing the wrong thing. Okay, because you ought to start. My mentor and life coach would tell us that you have to start up the new year from the early part, sorry, the closing part of the previous year. Okay, so you don't start the new year as the year is starting, you'll be left behind. You have to start ahead of time. Okay, and that's part of what gives you momentum and enough amplitude to be able to move with the speed at which God expects you to move with. Okay, that's what my mentor, life coach, teacher, Reverend Dr. Chris Oyakilome usually teaches us. Okay, many people think that some of these principles are just for, church and for anything that has to do with church, but no, these are life principles, life principles, and don't joke with it because this will guide you in whatever you do, like whether you are a Christian or you are not a Christian. This is just about success principles. So share the links. That's what we're on now. It's already 1 minute past one. Okay. Share the link, and let the people know that we are live. Let them know that we are live. Send it to all your contacts, as many as you have them. Let them come in as we begin to trade. Keep sharing, keep sharing, keep sharing, keep sharing, keep sharing. So we're going to be sharing to I'm going to be sharing to my personal contact. I've already shared to the groups. So next I'm going to be sharing to my personal contact. So have you shared the link? Please share the link. Share the link. So much value is being released, is being given during these live sessions. And there are many people out there into trading. Some have been blowing up accounts, some have been doing the wrong thing, been losing money, making mistakes. There are some even yet about to lose, and this might just be all they need, okay, to save them from that problems of always losing money. Okay, we always tell you that one of the things that uh, mentorship will do is to prevent you from, certain troubles that may come in the future. And that's why I advise that you take advantage of opportunities like this. This is a free live trading session. You don't have to pay anything for this. So why wouldn't you be a part of it? So keep sharing the links. Let everyone know about the live trading session, so they all can come in and join right now. Okay. And then when you join the live, please come to the comment section. Just let us know where you're watching from. Is there any topic you would like us to talk about during this live session? I'd like you to go to the comment section and probably drop one or two things, okay? A topic you want me to look into, and I'll see if time will permit me, to delve into such topics. Then, if for any reasons time doesn't permit me to, then I can possibly note it for other sessions. Of course, we're having weekly review coming up at the end of the week, and then we have weekly analysis coming just after weekly review, and then we're having another live trading session coming up next week. Okay, Monday, same time, GMT, 1 p.m. GMT plus one. So that's why it is beautiful if you are able to specify that this is exactly the topic where you would love me to talk about. All right, thank you. I can see you, Alex. You're watching from Zambia. Thank you for joining this live session. Thank you, Dr. Kamau. Thank you for joining from Lusaka, Zambia. So both of you are in Zambia. Nice, nice, nice. I hope you've been getting value from the previous live sessions we've been having, and all of the mentorship which we've been giving you so far. I hope you've been receiving value. I'm happy to see that you joined today's live trading session, and I want to assure you that you're going to get much value today, just as it has always been, and you will be glad that you joined in today. All right, now you've joined in, Alex, Sir Alex, Dr. Kemawu. Have you shared the link to your contacts? That's what I'm doing right now, as you can see with my device. Share out the links. Okay, there are a lot of people out there that this live trading session can make a lot of difference in their life. Okay, some of them have been desiring to find one or two places where they can learn trading, and they have not been opportune. This live trading session is a great opportunity for them to easily learn trading and learn it for free, not as though they're going to pay anything. So please share out the links to them, let them know that we're live, okay, and tell them that they can join in and they can learn. They can learn. Yeah, they can learn. Okay, okay, okay. Keep sharing, keep sharing, keep sharing. And then as you come in, please come to the comment section. Let us know where you're watching from, what state, what country, what city, where you're watching from. Let me know the topics that you are more interested in. Okay, then let me also know what value you have received from KFC Trading Academy ever since its inception and what we've been doing. Okay, just give me that feedback in the comment section, and that will help me to be able to improve in whatever I'm doing. Okay, so let's get the feedbacks from you. All right, so straight up, I'm going to be sharing my screen, and we're going to start up quickly with today's. So thank you for joining in early. This is just 7 minutes past 7. The links are already out there. Okay, there is a particular group I haven't sent these links to. So, but in as much as okay, I'm trying to share my screen. In as much as I haven't shared to some group, I've sent to several groups and a lot of my contacts. Okay, so it's done. It's done. It's done. It's done. Share the links. 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 Let them know that we're live and we're trading live. Let them know they can learn here. Let them know they can learn here. Okay. All right, all right, all right, all right, all right. So what's going on with sharing the screen? Okay, so let's start with trading view. So let me share only trading view. After which I'll take you to other ones. Okay, could have shared my entire screen, but sometimes it looks a little bit awkward. So let's just start with trading view, and from there would. But I hope I remember that it's only trading view I'm showing you, so I don't begin to tell you what I aren't showing you. All right. So one of our edge, which I was talking to I was talking to a friend in the course of last week. One of our edge that has helped us in trading is being able to understand the directional bias of DXY. Now, you agree with me, if you are a constant trader of GU and EU, that DXY sometimes can be very much difficult to predict. The directional bias of DXY sometimes can be difficult to predict. You agree with me on that? Because DXY, you're thinking it's going in this direction, and suddenly it just okay, like what we did this morning. Now, if you haven't seen the weekly analysis before, if you haven't seen the weekly analysis, then you are doing see the weekly analysis before you can. I always say see the weekly analysis before you can start the week. Because now I'm about to speak to you on DXY, and I wanted to start by telling you what I want to start by telling you about what DXY was looking like before what it's looking like now. Now, there are many people who didn't know that DXY was going to move today. Even me, I didn't know DXY is going to move today. But that's one of the attitudes that is important that you must have as a trader. Sorry, I was pausing because I'm getting some feedbacks. Someone is sending me a message on my DM that she needs permission to join the live session. I'm wondering what permission is she looking for. So I just want to quickly respond to that person. That's the reason why I was pausing, why I wanted to say something about DXY. So I said the weekly analysis would help you see what the week will be like. Then the weekly review helps you to see what we did, okay, and the mistakes, the errors, and how we are going to improve in the coming week. Okay, that's one of the key success criteria, key success indicators. Then the live trading session continues from what has been discussed in the weekly analysis. So usually during the weekly analysis, I will tell you that okay, this is what the market is looking like, and then during the weekly live trade, like what we're doing now, I will now tell you okay that this is what is expected, okay, and this is how to trade what was seen. So I was going to tell you that DXY during the weekly analysis was just ranging, and I told you that I'm going to be looking out for DXY to take out either this liquidity, yeah, either it takes out this liquidity, or it comes to this liquidity, but it was ranging, and I was looking out for the range to break out. Okay, let me show you the range in case you're not seeing it. Now, this was DXY's range of liquidity. It was just around like this. And all you need to know is if it's going to break up to the upside or it's going to break up to the downside. And of which once it breaks to the upside, you know that DXY is completely bullish. But if it breaks to the downside, then you know that DXY is continuing bearish. Okay. Sorry, I'm just responding to some people who are trying to join the live session. This one did me a voice note. I might not be able to listen to it right now. So the moment DXY broke to the downside, it's a clear indication that we are going bearish. Even though right now it's on a bullish liquidity side on the bearish move, and that simply means that it's going to retrace. Okay, it's going to retrace probably before it continues bearish again, and that's exactly where we may get our entry on EU. Okay, for those of you who noticed, I posted a buy. Oh, EU is already very close to the take profit. I posted a buy entry for EU, of which I say go in with buy limits here, and take profit should be just around here. But already it has gone massively. It has done massive move. But remember, do not chase the candles. You must stick to your rules. Now on this part, none of our rules were obeyed for this massive move. And in fact, from what I'm seeing, EU will definitely come to our entry point and still return back to this TP. Okay, but I must confirm certain confirmations before I will ascertain that that will play out just exactly as it is predicted by me just now. The reason why sometimes you cannot really tell what the market will be like is because none of us own the market. The market, what moves the market is the big players. What moves the market is the big players. Okay, it's not us. We don't own the market. It's just like a lot of professionals have been saying, don't trade this period, don't trade this period. Now, but when you come into the market and you are finding moves like what DXY did this afternoon stroke this morning, you will begin to think, oh, there's an opportunity here, because what we expect DXY to be doing is exactly what it did here. Okay, if you look during the Christmas holiday, this was December 24th. It kept on swinging and ranging, okay, and ranging, and despite the range, we were able to still get entries for the previous week, and suddenly it just gave this massive bearish move, of which what he has even done now is even longer than the previous. The retracement of this void is even enough to give you entries for gold. Oh, it's true, I haven't even looked at gold today. What was I doing? What was I doing? That can give you entries for gold. It can give you entries for EU. It can give you entries for GU. Now, this is the gold entry. I don't know how I missed it. This was okay. This was Monday. Yeah, this is today, Monday. This is 6:30 a.m. This is a beautiful entry. So gold broke structure here to change character, and this was the entry point. And the take profit should have just been around here for me, but it exceeded my target and it got to this point. So this liquidity has been used. Okay, this one has been used as well, and this one has been tested, and currently it has broken structure, changed character. Buy gold, buy gold, and buy massively, for gold is going up to the next liquidity point. Okay, buy gold. Now you can see how I trade. That's exactly how I trade. So I have sorry, just responding to a few people. I have I draw out, because what moves the market is liquidity. What moves the market are the big players. So what I do is I draw out the liquidities at different levels, I spot them, and then I go in from there. So that's how I'm able to predict what should happen in the market. So, and that's how I think you should also predict what happens in the markets. Okay. So, and that's why, having spotted all various liquidities, I'm able to know that, okay, price is coming from here and price is going here. And looking at this now, I don't think there is any bearish liquidity yet on the upside, not until price plays. Okay, there is. Okay, so this long buy may not play out, may not play out as expected. Okay, so if you're going to try it, then you're going to use break even, and you're going to use break even. As I am seeing a liquidity here. See one liquidity here, so make this your take profit one. So if price takes it out, so as you're taking this your break, take profit one, break even, that means your stop loss should come up here. Then now I'm this explanation is to help someone, because sometimes I just say BE on the group, and there are those who don't understand what I mean by that, but I'm sure this will help you now to understand. Because look at what GU did. I posted the GU signal, and because of my sharp signals, someone might just take it and just go and sleep, hoping that it was going to play out just exactly. Yes, it should have, but today is Monday, okay? And usually on Mondays, the rational bias can be very funny. So anything is expected, okay? And GU suddenly began to, go contrary to the prediction. So let me just be showing you as I'm explaining. So for someone who understood what I meant by BE, take partials, the person would have made his money on GU this morning. This is it. So GU, I posted this entry because I saw it, break of structure, change of character, on bearish liquidity. So I expected GU to get to this point. But like I said, we don't control the market. What controls the market is liquidity. Until liquidity is fully grabbed, you cannot ascertain, you cannot say that this is exactly what's going to happen. So as a trader, you are a predictor. You only try to predict through your setups, and you watch price play out in your setups. And sometimes when price gets in your setups, price do not play out as predicted. And sometimes it plays out as predicted. That's what the trading is about. So when it plays out as not predicted, you take your loss with proper risk management. So minimal loss that gives you the opportunity to try again. So those who have bad risk management, what they do is that they expose all their money. So as at the time when they are predicting and prediction goes wrong, they lose everything. So they don't have the opportunity to try again. So proper risk management means that you get in that trade, prediction gets wrong, but because your proper risk management says only so percent of your equity should be lost if you were wrong, and so amount of equity should be left for you to try at least 5 more times, and also with a proper RR. RR means risk to reward. Those of you who will be missing mentorship classes, um, the free videos we have on our page, you're making a big mistakes, because there we explain what RR is, which is risk to reward. So with a good risk management and good RR, when the prediction goes right, you are able to recover the loss on the wrong prediction and also get extra additional profit on the prediction that went right. So in predicting wrong, your stop loss must be stipulated. So for me, I use 20 pips. So in predicting right, your take profit should be more than that 20 pips. That's what is called higher RR. So risk to reward. So the risk says that if you are wrong, 20 pips is what you can take. The reward says that if you were right, 20 and above, that's 20 plus pips, is what you can take, not 20. Because if you take 20, you lose 20, you have zero. But if you make stop loss 20, take profit maybe 25 or 21, it must be more than 20. You will notice that when you were wrong, you have 20 pips loss. When you became right, you have 21 pips correct. So 2020 is zero, but the one pips on top of the 2020 becomes your profit. So that's where the RR rewards you. So that's why it's called risk to reward. So that I just explained to you briefly what risk management is. That's a quick overview on risk management. But this was what I was saying. GU moved too quick. Like I posted on the group, I posted that update. When you see things like that, what you do is you close your stop loss immediately. That's called BE. BE can only be done on the previous low if you don't want your stop loss to be haunted. BEs can only be done on the previous low. Take note. Okay, Alex gave a feedback on the comment section. I was going to speak on it before I got distracted with what I'm talking about. He said KFC has been really impactful. I highly recommend everyone to be and part of. Okay, he said part and parcel of KFC Academy, and your trading journey will skyrocket to another level. Yeah, what he said is really true. It's really true. And I want to recommend that every one of you will be looking for a reliable academy that can guide you in trading should join KFC Trading. So that's our website. I just posted on the comment section, and you can easily visit the website and get started immediately. Everything you need is on the website. That's the funny thing that a lot of people don't even understand. What many will understand. You don't even need me to learn trading now. All you need, just get on the website, get subscribed, and start from mentorship 1.0. As you're completing it to 7.0, you become a professional. But can you be able to dedicate yourself to learning? Can you to be able to dedicate yourself to learning? So that's exactly what KFC Academy was designed for. So having designed that online platform, we're launching out with the physical centers, and we're going to come to your country. That's the plan. We're coming to your country. So we're going to explore. We started in Abuja already. So we're going to be having a general physical center open up to everyone 1st February in 2025, and of which um we're going to have um continuous physical centers, and then have the first one in Lagos. I said Lagos because that's what most people in Spanish, German understands Lagos as. It means Lagos. They call it Lagos because of the way they pronounce some English words. So we're going to be starting our first physical center in Lagos, Nigeria, in July. Okay, we're going to have one physical center in July, and it will proceed after July. And after haven't had Abuja and Lagos, we're going to now explore other countries. We're exploring other countries. So we're going to look at, okay, say we are waiting for physical center in Zambia. We're going to look at Zambia. Yeah, because we have a lot of people in Zambia. We'll look at Zambia, we'll look at Zimbabwe, we'll look at South Africa, in fact, the whole of Southern Africa. And then we go into Ghana and many other African countries. I think we should hit Africa mostly because I'm a little bit not happy, a little bit concerned with the fact that the European countries have got some funny restrictions, as though they are doing us a favor. The training centers can only help the European countries. So it's not them doing us a favor. Okay, so I don't see why the European countries will be restricting us from a lot of things. There's this kind of EU laws and restrictions. In fact, there's some brokerage you would want to use, and once it is seen that you're in Africa, especially Nigeria, you are not allowed to use such brokerage. But that's racism. That's racism. I wouldn't mind to have a physical training center in America, in London. I wouldn't mind to have a physical training center in Canada. But the racism, even in Germany, I would love to have a physical training center in Germany. Please, 1 minute, please. All right, I'm back. So I said I wouldn't mind to have a physical training center in places like Germany, um, and some of the European countries. But the only problems I have with such a region are the racism and restrictions. So for me, I wouldn't mind to focus on Africa. I wouldn't mind to focus on Africa. Then let the European countries indicate interest and not see us as though we're not giving them value. For us to have a physical center in America is for the good of America, not for our good. Until Africans begin to think in this manner, Africa will not stand correctly. This is what my mentor, teacher, and life coach has trained us to understand, and that's the mindset he has given us. Africa has great value and is of so much value, but because of the depiction of the system, how the system has depicted Africa to appear in the minds of many, it is assumed that Europe is better than Africa, but it's not so. It's not so. Africa has got, in fact, my man of God will say that the most smartest, the most intelligent, the most excellent people are in Africa. So, but Africa has not yet been able to explore a bit of their intelligence. Just check it. Just check it. It's clear. It's everywhere. It's everywhere. Look at the what's it called? You look at what's going on in the European countries where you have people who have got to work several jobs in several shifts. You can't try it with the, in quotes, the white guys, like they say. You can't try with, you overwork them. But try with an African guy, the guy will be good to go. It doesn't matter how many times he works. Take a quick nap, wash up, cleanse up, he's working. Because there is just something about the African. So that on its own keeps us on the edge. So how come the world doesn't talk about it? Why is it that the only thing they remember Africa for is for blacks, for the bad things? Okay, so that tells you that there is already a controversy or a perception that has been created against Africa. And I, for a person, I have stood my ground as an individual that I'm going to change that narrative. Africa should be known for excellence. Africa should be known for the best. Africa should be known for her good qualities and for her value and resources. So that's a quick digression just to let you know how we are channeling our vision into the rest part of the world. So I see Dr. Kamau, he says physical center in Zambia, we're coming. Um, Sir Alex says Zambia is ready for KFC Academy launch. Yes, I know that. Yes, I know that. And we're going to launch it in Zambia soon, very soon. And some of you will be teachers there. Teachers there. That's the reason for these investments in you. These investments will become useful, very useful once we launch in your country. So get ready, expect us, we're coming into your country. All right, so that's a quick digression. Let's go back to what I was saying. I said each time I tell you to BE, here's the reason. You do not BE at a current low. Don't do that. It will haunt your stop loss. Look at this for instance. Let's say a guy takes buy from here. This is just an example, just to let you know what I mean when I say BE. Let's say someone takes a buy from this point and his target was just here, where the current high. Okay. Now watch what happens. Watch what happens. Price moves just as he's predicted, came up here, retraced, because price will always retraced, gave this low. Now this is the current low. I get it. So I said never use the current low for your stop loss. Don't do that. It will be haunted. It will be. Whenever you want to have a BE, your stop loss must be on the previous low before the current low. So see what price did. It pushes up, gave a new high, gave another low, like it was giving us a trend already, and suddenly it gave a failed high. Okay, did you see that now? So this high couldn't exceed the previous one. And whenever there is a failed high, what it means is that there's going to be another low. Did you see that now? Another low, which confirms break of structure, change of character. And that looks like that was going to be a downtrend. And that's the real reason why we were going to go on that downtrend. But look at what price did. All of a sudden, it came to take out only those people. It gave a failed high here and came to take out only those people whose stop losses are just on the current low. So take note when I say never BE on the current low, that's what I mean. Never BE on the current low. So that's it. Let me change it to red so that you can be able to know what I mean. Never BE on the current low. When you do that, you're going to be looking for trouble because you will get induced. You will get induced. Okay, inducement is coming for you, and it doesn't mean that your setup is wrong. It just simply means that there are certain rules about BE that you haven't yet understood, and you must properly understand. Otherwise, you're going to be doing it wrong. Okay, as you can see, never BE on your pre or on your current low. BE on the previous low. So imagine if this guy's BE was just on the previous low, as you can see here. What would have been his experience is that he would have still been on that trade and price would have just done what he did and retraced here and pushes up to his take profit. That's what it should be. There's never a time, there are some times like that, but not all the time would price just move straight to your take profit. Most times, in fact, price would test. Okay, price would test before we retest, retrace before going to your take profit. Take note of that. So anytime you take an entry, always make room for the retest or retracement. I always tell you there's a video I made, one of those free videos I made on YouTube. I always say in the video the spiral movement of candles. And in that video, I explained to you how that the candles move like snake. So a snake doesn't just go straight, it goes like this. Did you see? I'm using my hand to demonstrate what I mean. Like a swing. And that's how the candles are like. They don't just move straight. There are times when they move straight, But it's only when there is high momentum, high volume. So when there's high momentum, high volume, price goes poof, and that happens during CPI, NFP, and some various news, even um, Powell, Powell's speech. Okay, a few of such high impact news. So you just see price just goes boom. But except even after it has done that boom, to let you know that there is a spiral movement of candle, it will still return to retrace before it continues, or even retrace completely. Okay, so take note of that. So that anytime you're taking an entry, you make room for the retracement. Always make room for the retracement. So that on its own, let me now take out all this so I can finish my explanation in this. That on its own tells you, because someone was telling me about how helpful our signals has been, and she's going to continue taking the signals. Then I gave her a candid advice. I said, you need to learn how to manage the signals. Don't just take the signal. Manage. See, it's not the signal that is the problem. Excuse me. Even the signals you've been taking on someone else's group has never been the problem. The problem is how you manage the signals. How do you manage the signal? Because there are times when the person who posted the signal may not even have told you to exit that entry. Okay, and you may not even have known that you were supposed to exit the entry. So look at this now. So you find out that GU came, okay. The moment you saw GU going like this, I haven't known that it is Monday and several things are possible. It is expedient that you close up to this point. Now, okay, this is the current low. In this case, the reason we're doing this is not because that's the current place to be, but we have to be because we are securing profit. So that in case for any reasons, because I was expecting this move that happened, that's why I said be. I was expecting it. In case for any reason, even if price comes this way, it takes this stop loss. The loss becomes small. You know why I was expecting this move? I'll tell you now. Do you ever remember the word that the trend is your friend? GU is on an uptrend. So that entry was a counter trend. Look at it. GU is on an uptrend. That entry was a counter trend. So if you are counter trending or counter trading, it's always important that you secure. You secure because the liquidity is against you. Okay. So if the liquidity wants to surprise you, you are protected by your stop loss. So that's why I said B. So that could have been the first B, and then when price gave this new low, you can maintain that or you lock up here. Okay, that's the only reason. So for this particular case, the only reason why the current low was a good B space was because we needed to protect the profits. And then for some of you, exit. Like for me, I didn't BE. I exited. The reason is the BE will not give me enough profit because the target profit is just 27 pips. So I haven't caught almost 20 pips. It's best for me to just exit because I had enough profit. Okay, for that particular month. So I actually exited. So, but if you had obeyed and you BE'd, you will notice that you'll be out on BE. If you had obeyed and taken partials, like I said, you'll be out on partials. Now, when we say take partials, this is what we mean, in case you don't understand. Taking partials only occurs when you take several entries. So let's say you go in with 2 entries, closing one of your entry is taking partial. Then the other one that you're allowed to play, you can BE. But for me, for a very long time now, I don't take more than 1 entry because I'm looking at my consistency rules. Taking several entries do not validate my consistency rules. So it depends on what works for you. So I've been taking 1 entry, so I take 1 entry at a time. So partials may not really work for me. What will easily work for me is to exit. But if I take several entries, depending on what I'm trading, if I'm gambling, I can take several. But since I'm not gambling, I'm taking a good professional live trade. All I need is 1 consistent entry with my consistency rules, and Either I exit it when I'm satisfied, or I break even to close the loss. So that if price doesn't go in my direction, I'm not exiting that entry in loss. So that's what I mean. So each time you find on the group, I say BE. That's what it means. BE means break even. Take note of that. BE means what? Break even. I think we'll soon go bullish on GU. It's just about to post that entry. I think it's okay. Okay, hold on. It's not time. DXY is going bullish. So let DXY get around here. It's coming to this fair value gap. So once it gets here and it continues bearish, find the bullish moves on EU and GU. So for EU, I told you already, I said it's going to come back. It's coming here. Once it gets initiated, go in. It's coming back to the take profit. So it went so close to the take profit, but it did not touch it. Why? It's retracing already. In this current retracement, it will retrace completely and come back there. Now, I don't know if this fair value gap will be enough, but let's just keep all our eyes on EU. I don't know if we know, because it looks to me like we may want to induce all of these people, because this looks more like we can call this liquidity sweep. We can call this liquidity sweep. It looks like it was going to come sweep liquidity before it goes bullish massively. So let's put all eyes on this. If it's liquidity sweep, then it means that stop loss 20 pips from this point may not hold that entry. Okay, this is 11. Okay, 20 will work. So if you are going in, make sure your stop loss is not within this side. If you are going in, your stop loss should be here. That's the only way you can be safe for that entry. Take note of that. So we have DXY. Excuse me. DXY currently retracing bullish. Okay. So I haven't confirmed that. We will now find the entries. I know there's someone who may want to go bearish because DXY is retracing bullish. I don't think it's a good idea, and the reasons because DXY is actually bearish. It's trending bearish. Okay, EU is trending bullish. GU is trending bullish. So if you are going bearish, you will be against the trend currently. And there is a popular saying, the trend is your friend, because the trend is usually the move of the liquidity. So if you go against that, you're going to be looking for trouble. So it's only smart that you maintain the the trend. The trend is always your friend. So that's it on that entry. So for gold, I think I already explained to you why gold. So can you see gold is, hey, I didn't post it on the group. Now, if you were live, congratulations. Those of you on the group who didn't go live, sorry about that. So gold is currently on TP1, as I said. So for some of you, you may just exit there because there's a liquidity that will hold gold from here and will not permit it go that massive buy which I saw initially. So we have 2620 121 for TP1. So 2620 121 for TP1. So the best way to take that is TP1, you break even, right? So TP2 should be, I think TP2 should be the final TP. Let me see. Yeah, it is. So TP2 should be the final TP. which is 263,584. 2633584. So we have 2633584 TP2 for gold. So currently it has hit TP1. So let me just post hit TP1 already so that anyone trying to take that entry, you can see I didn't say buy. I didn't say buy. So you see why it's always good to join in this live. Those who joined in saw it when I said gold is buying. But those who weren't in didn't see it. So, like I said, if you're joining the live, come to the comment section. Let us know where you're joining in from. If you have a particular topic you would like us to discuss, you could drop it on the comment section. Yes, we may not talk about it today if we don't have enough time, but expect us to probably create our time to talk about it maybe in the next possible time that we have a live training session like this. And that probably could help you improve your trading skill or trading career. We had some beautiful take profits just last week. And I'm sure there's some of you who were wondering how those take profits came about. The reason is because, or was because, you were not in the live session last week. So last week, live session. The last week's live section, this is Ethereum. The last week's is still going bullish, Ethereum. It's going to, let's see, let me see. Ethereum is going to 3,400. Let's say 480 before it may retrace, before it's actually going to return back to 4,000. Just like BDC. BDC will return back to 100,008. But we're waiting for the retracement to fully complete. Okay, so this is it. And it's actually taken out this liquidity already. It's taken out this one. Okay, so BTC would retrace. It's taking out this liquidity already as well. It will retrace and you can find the void is very big. It's very big. So it's coming back first of all to 30 to 98,000. Those of you who want to hold BTC on spot, you can hold it on spot wallet, buy it now that is 93,000. Hold it until it gets to 98. If you're on spot wallet, hold it until it gets to 100. If you're on spot wallet, 100. If you're not on spot wallet, you are trading on maybe MT4, MT5, or you're trading on derivatives or direct trading, maybe on an exchanger app, hold it until 98 because it will do a retracement before it comes to 100,000. So, but let's go straight to those other ones. We have Nasdaq. Okay, this is not the Nasdaq. Sorry, we have Nasdaq. So this, I think this should be the Nasdaq Tech 100, US Tech 100. So we have Nasdaq. We posted this entry, it came straight take profit. There are some of you who are wondering how. It was during the live trading session for last week. Okay, now watch something. Look at this structure NAVDAQ gave. Then look at the structure US 100 gave. Does it look familiar? Then look at the structure US 30 gave. Does it look anyhow familiar? The same structure. All these things occurred when I think it was speech. Powell speech. I think this was Wednesday when that massive bearish move happened. Okay, and when that happened, it just automatically. Someone is asking me to share on moving averages. That's Sir Alex. Okay, we'll look on that, but that's an indicator, and I don't use indicators. But I can just tell you what moving averages are for the sake of the knowledge. So, like just like what I keep telling you, um, don't use moving averages and use your strategy. Don't do it. You will not succeed in trading. It's something I've learned. But if moving average is your strategy, stick to it. Don't use moving average and use this one and use that one. You will mess everything up. If it's moving average, you use moving average. Stick to it. Then if you want to change, stop the moving average. Get another one. That's the only way you can trade successfully. The reason is because moving average has its edge. But by the time you start playing it with another edge, it mixes it up because this is it. Every edge has its own profitability. So if you're using moving average, it might supposed to be profitable maybe this week, and the other edge may be profitable maybe next week. So when you mix the two, you mix the profitability, and eventually in the long run you are not profitable. So just be careful about that. So I will explain moving average maybe in the next class, just for the sake of him, just for all of you to understand what a moving average is. Okay, but I don't use moving average. Now, if you look at the chart currently, you will notice that this is not the strategy I'm using to trade GU. That explains it all. Why am I using trend lines? And I don't use trend lines on GU. The reason is because these particular ones, they trend very long time before they retrace. I started it with JPY. That's when I created this strategy with JPY. That's GBP JPY. I found out it trends. Did you see it just hit take profit? This entry was posted just last week during the live trading section. It just hit take profit. It trends for a very long time. So because of that, if you're there doing all those chappy entries, you will not catch good moves. So that was when I created this strategy. So I said, okay, fine. I'm going to find a trend line which will serve as my liquidity point. And once price gets in, because that's basically what trading is about, what moves the market is liquidity. So mine is to find my liquidity points. What is a liquidity point? A liquidity point is a point where we believe that there's a lot of money in that point. And we strongly believe that the big players are going to be going in from there. Liquidity can also be where there's a lot of many stop losses. Why? Like we said, there's a lot of money there. So where there's a lot of many stop losses, there can also be a lot of money there because the brokers, the financial institutions can actually capitalize on the stop losses to grab a lot of money and say, okay, no, price can no longer be here. It needs to move. So whatever it is, just anywhere price is constantly rejected is liquidity. Look at it. Price is rejected here, price is rejected here, price is rejected here. 3 times. So it becomes a liquidity. So 3 touches gives a trend line. If it's now 4, it's still okay. But as long as there is 3, it's a liquidity. There was one on this path, but we removed it because we're no longer using it. That was the one we used for this entry. Okay. And the moment it was broken up to the upside, it's no longer valid, and that's why we took it out. This one is still here because we needed to see if price was going to take it out. Now price has taken it out. We're taking it out. It's no longer useful. Now I said let price get to the take profits, and then we're going to find another liquidity. So as you can see, price is already on the take profit for GJ, that's GBP JPY. So we're going to come back to now. You're going to have your time frame where you do your trend line. You're going to have a time frame where you take your entries. So I do my trend lines from the 4-hour time frame. It's a simple strategy. I can teach you anytime you want it. Now, but it can only take discipline to use it. Like what I just said now. That's why I'm saying this thing now for moving average. You cannot use this trend line strategy and go and mix it with another strategy. It will not work. So that's the reason why a lot of people don't succeed in trading. It's not nothing is really bad with your strategy. Nothing. Nothing is bad with a simple strategy. A simple strategy is good. In fact, the strategy should be as simple as possible. It is only a simple strategy that can be improved. Except the strategy is simple, you may not be able to spot the mistakes, the errors, what is really wrong. When the strategy is Some of you know me when my strategy used to be very complicated. After a while, I began to decomplicate it. I began to take out, a little bit, a little bit, a little bit, till I finally simplified it. I've read, made a lot of researches, and I keep seeing it, keep reflecting. Simplify your strategy. The market can be so cumbersome and so funny, such that you just want to become a goalkeeper in the market. You want to catch everything, because that's what made me to complicate my strategy. Because I felt, okay, I carry from Jeffrey Benson, I carry from Habi FX, I carry from Willis Capital, I carry from, I'm calling top traders in Nigeria. These names, in case you don't know them, you can check them out. Jeffrey Benson, Habi FX, Willis Capital. These are big players in the industry. Koji FX, Ghana. Carry all those strategies and put and say, hey, if it doesn't work with Jeffrey, it will work with Habi. If it doesn't work. That was how I perceived trading should to be like. But that got me in trouble because I didn't understand what I'm teaching you now. See why it's good to have a mentor, someone who could guide you. If you mix Jeffrey's strategy with Happy's strategy, you will not succeed. The reason is because there are days where Jeffrey's strategy ought to be profitable, and there are days where it ought not to be profitable. That's how every strategy is. It has its profitable days. He has its unprofitable days. Okay, so that's why you see that we used to say check your win rate. So Jeffrey's strategy has win rates. So in a week it may be 6 win rates. Happy's own has maybe 6, maybe 7, maybe 10, and they are different. We usually will say what you see in the market is always correct with what another person sees in the market. So you might be buying, another person is selling, both of you are correct, and you will be surprised to see that you bought, the other guy sold, and both of you made money. Look at what happened to GU this morning. Anyone who bought would have made money. Anyone who sold would have made money. Then you can understand what I mean. It's like one time when Jeffrey said buy, Abby said sold, that sell. And some people were like, these people are confused. No, they are both correct. Look at it. So we saw GU, it's on the trend line. So what did he do? How many pips? Let's check. It did just 19 pips. So someone who buys from that same point and his stop loss is on 20 pips per adventure is in profit. So can't you see, the one who bought and the one who sold are correct? But what makes the difference is that the guy selling has what he saw. That is his setup. Are you saying? The one buying has what she saw or he saw. That's his setup or her setup. The secret you must learn now is that the guy who sold was correct. The guy who bought was correct. But there will be a time where the guy who bought will be wrong. The guy who sold will be wrong. There will be such a time. Now, if you are using the both people's strategy, there will be clash. There will be clash of profitability. So when that person, this one is taking losses, you will take his losses. When this one is taking profit, you will take his profit. So you will take all the losses, you will take all the profits. Eventually, you will not be profitable. So that's why you can't mix all the strategies together. So the strategy is never the problem. The problem is the person using the strategy. Don't use plenty strategy, use one. If you say that strategy is taking time, yes, the trend line strategy takes time. It takes time. It takes time. But guess what? One move, great achievement. Let's go back to that GBP, JPY. One move, great achievement. That's the beautiful thing with the trend line. So if you look, you see, excuse me, you see closely that this is a lot of pips. But it took days. Sometimes it could take weeks. And that's it. That's what most hedge funders do. Okay, so they just do the analysis, they wait for weeks, sometimes days, sometimes months. But when price gets in their confluences, in their setup, they begin to find entries. So you have been trading for days, they just take one entry and they made massive profits, more than what you've been doing for several days. So every strategy has its, so you can see why I have a strategy for this. There's a particular account that I use in trading this. It must be big funds. Use big funds for such. Then the other ones, smaller funds. So when it comes to the day traders, the day trading path, smaller fund, not necessarily smaller fund, but smaller targets. Of course, smaller fund, smaller targets. Smaller fund, smaller. So if you look, you see 20 pips, 30 pips, okay. But you check the other one, you are seeing 60 pips, 70 pips, 80 pips. Now, sometimes this gives us 70 pips, but not all the time. Not all the time. So you must pay close attention to which particular strategy you're using, and you must stick to it. I'm saying this to you clearly. If you will be profitable in 2025, you must stick to one strategy. Don't stop mixing up strategies. Moving average is a strategy. If you will trade moving average, trade only moving average. Stick to it. Don't come and do moving average and then I'm trying to remember their names now. I used to know them a lot because there was a time I used to use them. But like I always tell you, indicators are good, but indicators lag. They lag. So that's why sometimes it's not enough to use only indicators. There's some other confirmations you must add to the indicators. They lag because they are AI. Okay, they are robotic. So there are things that gives them the indication to appear. Okay, so and sometimes so sorry, there was this call that came in and it came into my line and it disconnected because I'm using my line for this network. And it disconnected me. Sorry about that. So, like I said, indicators lag, and that's why you must be, very careful in using indicators. So, I used them for a while. So, I'm profitable using them, and suddenly when they lag, I become unprofitable. So, I said, I want to see what the indicator is saying since my brain. You see, that's what we've been trying to educate people on AI. The AI has no intelligence of its own. That's why it's called artificial. So you should understand what artificial means. It's not real intelligence, it's artificial. So it's what it is told to do that it does. And that's one of the dangers of artificial intelligence. It doesn't know anything, it's what it is told. It's like those who said, There was a time the AI was against the Bible, and suddenly it's now in support of the Bible. It's because it was told to be against the Bible initially, and then you ask him certain questions about the Bible, he has no information about it, and there was a raised concern by the Christian community against it. And all of a sudden, when they saw, oh, the Christian community is majority, we might not sell, they now introduced the Bible into it. So all of these things are what you should understand when we say AI, artificial intelligence. It just tells, it doesn't have its own intelligence. It's an artificial. What it knows is what it is told. And so if it's not told enough, you are doomed. You are in trouble. Because the information it's going to give you is like someone going to ask Chat GPT of information it doesn't have. Even the Chat GPT will tell you, I don't have this information. Okay, that's what the AI is, and that's what indicators are. They are robotic, they are artificial intelligence. So, and that's why they lack, because sometimes they may not have that information to give you at that time. But when the information comes to them, they now respond, and then sometimes it's too late because the entry has already moved. And then you want to now go, that means going in at the wrong time, it gets you in trouble in trading. So I told myself, I said, no, I must see this thing with my eyes. And the moment I started seeing it with my eyes, I stopped using indicators. Those of you who've been following me from the onset, you understand what I mean. The next question he raised here, that's Dr. Kamau. He says, sir, you are more inclined to price action. Does this mean it's recommendable compared to the earlier SMC? So he's saying that he noticed that I'm more inclined to price actions. Then does it mean it's recommendable to SMC? Nothing is more recommendable, Dr. Kamau. Nothing is more recommendable. What is recommendable is what works for you. What's good enough for you is what is recommendable. Every trader, I must tell you this, and that's what every professional trader will tell you as well. Every trader has his niche in the market. I'm telling you, every trader has his place in the market. So what happens is you discovering it. So that's why the best thing to understand for us is do what works for you. It might just be SMC. For those who don't know what SMC is, that's smart money concept. Okay? But you need to know that these are people's strategy. Price action is not necessarily a strategy. Just like the name, price action. So that means price gets in a direction and takes an action. So price action is not necessarily a strategy. It's just it's like more like an observation. So everybody looks at price action to look at the market. But the SMC is someone's strategy. So the guy created it and named it SMC, just like ICT. Okay. But the question is, what is your strategy? So what I did was I used SMC for a while. I stopped using SMC when I discovered that there is a huge community on SMC, and all of them, their stop loss is on the same path. So what happens when they stop loss hunting? It will take all the SMC traders out before price will begin to move. That's when I stopped using SMC. So I don't use SMC now, but there are certain steps I take in the market that looks a little bit common with SMC. And that's because I was using SMC before now I have found my own niche. So I have what I see in the market. That's what makes you a successful trader. You get to a point where you now have what you see, and that thing that you see in the market helps you. You win always. You just win. You see? So that's what mentorship does. It helps you to use what someone is seeing for a while, and then opens your eyes to see. There was a time I'll be watching videos, like I think Jeffrey Benson one time made a video on how to create a strategy. I watched that video. I didn't understand what he was saying. Because first you must know what a strategy is. But I've been kind enough to teach you all on strategy. I taught extensively on strategy. In fact, the last VIP mentorship course was strategy skill, strategy skill. I taught you extensively. Okay. So with that teaching, you already know, oh, this is how to create a strategy. So you see, I learned by using somebody's strategy. So I used the guy's strategy for a while, SMC and ICT. And I discovered, oh, this was how he created it. Until you discover how he created it, you cannot create a strategy. So that's what it is. So to answer that, nothing is recommendable. What is recommendable is what works for you. It might just be that moving average. I know a guy that trades moving average. He doesn't even use the laptop. He doesn't even use the computer. He just uses his MT5 on his mobile device. He just turn on the moving average on his MT5. Anna is here. She says, is there a recent video on your YouTube page that explains the exact strategy you use? I use two strategies, and it's clear. It's even stated in this particular video. But I think I will explain, I will elaborate on that. Now, there's a secret to the strategy I use that was taught in, I think, VIP mentorship course 3.0 or 4.0. And many people did not take note of it. And I I didn't bother to, the reason why I didn't bother to even make people take advantage of it is I don't want all of us having our stop loss on the same path. It's a big secret again. It's a big secret. And I'm sure you understand what I mean by that. So I say, okay, if they don't even use my strategy, it's even better for me. So I can just be using my strategy and be making my money. I don't want all of us having our stop loss on the same path. The reason is because of stop loss hunting. When a large community now has same stop loss, when manipulation comes, what happens? Is seeing the stop loss. So to be smarter, so I just feel let everybody use their strategy. So, but I knew that after this strategy has won plenty times, somebody will ask this question, just as Anna is asking now. So she wants to know the exact strategy I use. The strategy I use doesn't have a name, so I can't name it except I say this is the name. So it's just the strategy I use that works for me. Um, it was explained in VIP mentorship 3.0 and 4.0, and it's just simply spotting the the liquidities in the candles. Okay, so and strictly order blocks, no fair value gap. Big secret. So it takes anybody who is smart enough to catch that. No fair value gaps. So the reason is because someone is wondering, well, so why? So now you can see why I told you, if you're sticking to moving average, stick to moving average. Don't add another one. The reason why there are no fair value gaps is the laws behind fair value gaps will complicate that strategy. So I just left it. So what I do with fair value gaps is I use fair value gaps to know how far to go in a void. If I'm taking profits on a fair value gap, I don't take the whole fair value gap, I take half of it. Try for big fair value gaps. Are you saying? Then I don't use fair value gaps to confirm my entry, because a lot of times they are fake fair value gaps. Do you see that now? Then I don't just use any order block to confirm my entry, except the order block that price got in, then came out of the order block and give me my confirmation. That's my entry. So, disclaimer, this explanation does not mean that you've understood everything and that you will be perfectly profitable. You will still need to practice what I just said. Oftentimes, what do? You can start by learning what order blocks are. Having understood them perfectly, or understood fair value gap perfectly, you will now know what I just said and you will now begin to apply. So my liquidities are mostly order blocks, because I found that in using SMC for a while and ICT, I found that what actually moves the markets are order blocks. So there's a place in the candles that everybody's buying. So I'm able to see it and I just mark it. So that's why if you look at my strategy, you see that there are a lot of all these things are order blocks. All these things are order blocks. So that's my secret. So some people have made me say my secret in this video. So you're like, but why is his chat busy? And he says we should not busy our chat. That is the thing. That's what works for me. If you look at JPY, that's GJ, you see that it's not busy, it's free, because that's what is used here. So the strategy used here and the strategy used here are not the same. They are not the same. This strategy is very, very good, and that's why it can trade during Christmas. It's dangerous to trade during Christmas. You might just be the liquidity in the market. But that strategy is so good that it can trade during Christmas. And it will trade even during New Year. As you can see, it traded today. It will even trade tomorrow. Tomorrow is 31st, right? It will not trade on the 1st, of course, because there will be serious holiday, but it will trade on the 2nd. Because it's a good strategy. And it keeps you safe. There's a mentee chatting me up, I think a few days ago. She said she's always scared to go into trading. So I told her something. I said, yes, it's because of the strategy you're using. So your strategy you can be so good with your strategy that you are now have confidence in your strategy. But when you are finding yourself still afraid, you're still scared to go in, then something is wrong with your strategy. So if you watch that VIP mentorship course 3.0, 4.0, for those of you who are in the VIP package, just watch the video. I explained it till the end. Some overlooked it, they didn't take it serious. So I was waiting for this question that Anna asked. Then it has come, I've answered. There's still some people that are not in this live class. They did not hear this thing I just said. So they don't even know this secret again. So you see, it's always good to keep up with training sessions so that you can update yourself with information, knowledge, and to guide you. Now, there's one other thing I would love to say. As a mentor, we do not force anybody to use our strategy. We don't. No mentor would force you to use his strategy. It's one thing I tried to do from the beginning when I started. I don't try to tell anybody I teach that he must use my strategy. I try to tell you, use yours, use yours, use yours. But you should be smart enough to know when yours is not working for you, to use the one that somebody is using. I used Jeffrey's strategy for a while. Some of you who's been following me will know. I used his strategy for a while. It's not. I didn't really use Habi. Now the reason I used Jeffrey's strategy for a while is I knew a guy who was using Jeffrey's strategy. We're close. We even met physically to trade together. So he showed me. He's in the VIP package for Jeffrey. So he showed me some of what Jeffrey uses. So I used it for a while. But I had an issue with it, and the issue is I'm not able to know his take profit. That was where there was a problem. So most time price doesn't get to the take profit. So I had a little bit of concern. So I said, no, I must look for a strategy that gives me the TP. So I went to study SMC, ICT, and then I saw the TP. So Solomon King, I will give this credit to Solomon King, another very good guy on SMC and ICT. Solomon King made SMC simplified, ICT simplified, made it easily understood. Because if you're watching SMC sometimes, he's a white guy. He's English. You must first have to understand his grammatology before you're able to even understand what he's explaining. So it becomes hard work to even know. The first time I tried to understand him, he was a little bit, ICT, same thing. Even ICT's son, because ICT's son has his own strategy. I had to go look at his strategy as well, and it was not that easy to easily understood. But thanks to Solomon King. In case you don't know Solomon King, you can search him up on YouTube. Solomon King is a good guy. He's a good guy. He is a good guy. I must say that because he just gives everything there. So it's left for you, because there are a lot of people, they want to succeed in trading, but they don't give time to studies. They don't give time to learning. And how can you succeed? So I had to go look at Solomon. He explained SMC he simplified it. Those of you who's been following me for a long time, you would agree with me that there were times when I would post. Sorry, power just got off where I am currently. I need to turn on power. Okay, let me turn on an alternative immediately. All right, I hope this helps. So Solomon broke down the SMC rules and the ICT rules, and that helped me a lot to understand SMC. That's where I understood very well. I'm seeing so that's where I was able to understood. I was able to understand very well what SMC, the power is being restored. So I was able to understand what SMC really is and what ICT really is. So I don't know, Anna, you sent me a message on my DM. It looks like it's a question. Is it part of what you want to be discussed? You're saying something about highs and lows. So I saw a video where you identify the high and low of the previous week. Is that it? Yeah, that's what I was talking about. That's my previous strategy. And that was okay, highs and lows of the week. That's Jeffrey's strategy. Yeah, highs and lows of the week. That was Jeffrey's strategy. If you even look at this, I don't think he does it again. Highs and lows of the week. But that was the strategy that gave him the big hit into the market. But one thing you need to know is that strategies don't work forever. Okay? What you need to do is you will need to keep reviewing your strategy. So that's how we have weekly reviews. You need to keep back testing your strategy. You must be able to understand when your strategy, we're dealing with algorithm. The times when algorithm gets used to your strategy and it begins to play against your strategy. So you're like, so this strategy is not working again. So what you do then is to re-strategize. So you can possibly introduce new rules in your strategy, but just back test it to see if it's still playing. So because strategies are setups. So let's go into the chart. Let me show you quickly in rounding up. Strategies are setups. So take for instance, this setup is created. Okay, like what's happened with gold. Let's just use gold. You can see it has taken TP1. You may go to TP2. So it's set up. So how did we get this entry? Simple. They were setups. It took out all those liquidities, right? Then it's currently on this one. Once it takes out this one, where is it going? It's going up. That's basically what a strategy is. Now it has been back tested. That's what back testing is. Back testing means you have the strategy. Go and try it. Go and try it out in previous times. Replay. There are some that may not know back testing. Let me just show them quickly. So this is not a paid account for TradingView. For a paid account, you can easily do it. Okay, so you can't do it on 15 minutes on a free account. So you will have to pay. That's you pay for either monthly subscription or yearly subscription. And people don't complain about this. It's only us mentors that say pay for our mentorship they complain about. But that's by the way. You cannot do back testing on trading view. You can't even use trading view smallest time frame. You can see there's one tick, there's 10 ticks, there's 1 minute. You can't use 1 minute. Let me see. Oh, 1 minute is now open on trading view. There was a time it was not opened. Let me see 2 minutes. You can't use 2 minutes on trading view. Did you see it? Let's go back to 2 minutes. You can't, except you pay. Then you cannot use 10 minutes on trading view. Now, can you see what gold is doing? It's taking out that liquidity. You can't use 10 minutes on trading view except you pay. So because of that, that restriction is also on back testing. So this is what back testing is. You replay. So you can replay, you can draw your setups in previous times, depending on the um, particular pair you want to trade. You can draw your setup in a previous time, cut it in previous times, and play it and watch what plays out. So if it plays out well and goes to your take profit, then that strategy is good. Then you try it several times. First time, second time, third time, fourth time, fifth time. Now, there are times when it will not play out. So that's where management comes in. So in managing, you are able to check, okay, how many winning rates, how many losing rates. Okay. So you now know, okay, so if my total entries are 6, my winning rates, that's TP is 3, break evens are 2, stop loss is 1, I am profitable. Is if it's stop loss, stop loss, stop loss 6 times, it's not a good strategy. And you cannot know that except you back test it. So let me show you what I mean. So you can't do replay on 15 minutes. You try it, watch what you will see. It will ask you to pay. So for a free account, all you need is, so you can backtest from 24 hours to months. So as I'm backtesting from 24 hours, I am doing it as though, now I can't use this because I have Rwanda. So let me use FXCM. That's XAU USD. Let's use FX. Okay, let's use forex.com. This one. So for this one now, wow, can you see what gold has done? This was when we are using our previous strategy. You can see gold has gone massively bullish from that previous time. Imagine someone who bought gold that time. This is daily time frame. Imagine how rich that person will be. That time we're trading gold. Gold was about 1,958. Now gold is 2,600. That's by the way. Let me just take out all the drawings quickly. All right, all taken out. So this is what backtesting is. Now you don't depend on your setup chart. What you do is you go to a higher time frame per adventure. You go to like for me, I can go to 1 month. So when I come to 1 month, I'm still using this to answer Anna's question. So I just spot the other block. So if you look at this 1 month now, there is another block here. Okay, there's one there. Then I think that's the only other block in 1 month. Then I can come to 1 week. When I come to 1 week, okay, I can see another one here. They are plenty safe. I can see one here. Then I can see another one here. I can see another one here. Then I can see another one here. Then inside here, okay. So now I haven't done that. on my entry time frame. So going lower, I am now in my entry time frame. So what do I do? Quickly, I go back. I haven't drawn out the order blocks. You go back. What do? You cut price from the beginning of the order blocks. Okay? Then you play it. So this is how to do back testing. So you play it. Which changes does he want to see on the laptop? Does you mean the screen is not moving? Okay, let me check the feedback here and see if the screen is moving. So Alex said they can't see changes, but the screen is moving. I just checked feedback now. I think you should check your network, Alex. Hmm? The screen is moving. I just checked the feedback. Okay. Sorry about that. That means it's my laptop. My laptop is a little bit overworked. Sorry, I'm making plans to get a faster laptop. Okay, I think this one has really tried. This one has really tried. The first money I made in trading, I used it to get this one. I think that was around 2021, and it was a very good laptop as at then, but it's done so much. So I need to let him rest and get this time around a faster one that'll be faster than this one. So sorry about that. I think it's the laptop that is overworked. Okay. So I know the screen is moving now. So what you do is you just play it, okay, and then see what price will do when it gets in the order block. So this is where most time I tell you don't buy. There are two order blocks here, up and down. Okay, these are bullish order blocks. They are not bearish order blocks. Okay, they are bullish, so they are going for the upside, right? I think they are bullish order blocks. So let's see. We are looking for bullish entries now because these are bullish order blocks. So sorry, this was too fast. I needed to take this. So watch it now. Break of structure. Is that? Yeah, break of structure, change of character. So the entry is here. This should be the entry. And stop loss should be just after the previous low. Take profit should be on the order block. There was a time when I used to put take profit at the middle of the order block, but I haven't back tested it many times. I saw that price sometimes doesn't get there. So I started doing on the order block. Okay, so do what your setup is showing you. Okay, so let's see. It has gone to take profit already. It got initiated now. It has already gotten to take profit. So let's hold on. Let's look for another entry. So leave that for now. Okay, so let's look for another entry. So it's currently on the order block. Okay. Okay, so it broke structure here, but it hasn't checked character, so don't go in yet. These are rules you must know before you take entry. Don't go in here, it will induce. Now, this is it. It broke structure here. It has just changed character. So the entry should be around here. So you just have your entry. Your entry should be around here. So it has tested. I think this should be a bearish order block. I can't remember. I didn't take note of it. I should have named them. Okay. So this should be your entry. Let's see. Let's see what price does. He hasn't gotten to the entry. Okay, so that is it. This is exactly why you need to back test to conclude your strategy. Now it broke structure here. It changed character here. The massive move started from here. So if I use my fib tool, in case you're wondering why I took that as my entry, if I use my fib tool from here to here, the equilibrium is my entry. Oh, okay, that means I'm the one that didn't see it well. It was close to equilibrium, but it did not enter though. So that was why I chose this place as my entry. I was looking at the from the equilibrium below, which is what's it called? Discount zone. Discount zone, not premium. As I'm not intending to buy at premium. So, but anyway, it's let it play out. Let's see. Let's wait for price to return again. So there's something I noticed. I need to do this. I need to do this drawing again. There's something I noticed. The cutting is too far from the action. Sorry, please. So that will not play out as expected. So let me remove the drawing again and do it again. I hope you understand what I mean by that. The cutting is too far from. So I'm removing the drawings. So I'm going to do them again. So let's go back to that 1 month time frame. So let's just spot the other block. Then we'll just cut close to the other block. So this is one. This is one other block. So I'll cut from this high time frame. I will not cut from 24 hours time frame. That's how the other block can work. Then we'll go down to the lower time frame, which is 1 week. So that's what's called top down. So you start from top and then you go down. So on 1 week, you will find this one. So there's even one here, safe. So on 1 week, you'll find this one. And then you'll find this one. Then you'll find this one. Those ones may not even play because price has not touched them. So then when you go down to 24 hour, so let's cut it first. Let's go to 1 month. Then let's cut it on the other blocks that played out, which is here. Okay. Then we go down to 24 hour and play to see what it did when price got to the other block. So let's play now. So this is it now. So when price gets in your order block, you begin to find your entries. So price enters the order block. Do you see that now? So when price enters the order block, and guess what? The take profit is on the next order block. That's what I want you to understand. The next order block, of which there is no even next order block here. So for this case, sorry, please. Let's do it like this. Let the take profit be on the next high, which is just here. But you don't go in immediately. You have to wait for your confirmation before you go in. Don't be so excited to say, oh, price is in the other block, let me buy. No, that will happen to you, especially when you are still new in trading. But when it has burnt you many times, you'll behave. Okay, so price is on the other block. So let's see what it does first to give us the confirmation. Okay, so we have, first of all, we had break of structure, change of character. I think that's the entry. I think that's the entry. So the entry was supposed to be just around here, but what you are seeing is inducement. So it's supposed to be just around here. And it's going straight to this line because that's the next closest. So stop loss will just be just a little bit below because of inducement. So price is going straight to that line. So you must get to that line before the next thing will happen. So if you have done this kind of thing, you back tested it, it didn't work, then the strategy is faulty. If you do it, it worked, then the strategy is correct. Now, if you do it, now this is just one, because this is where price is currently. To get more, you have to go back to its historical movement. You have to go back to historical movement. You look out for what I just showed you now. Do you understand? In historical movement, and try it and see how it plays. Okay, that's what backtesting is. I'm not backtesting actually for now. I'm just showing you what backtesting look like. For those of you who have been in all my meetings, like Dr. Kamawu, Sir Alex, I'm sure you know what backtesting is because I've backtested with you people many times. But for the sake of the person who asked the question, as Anna, I'm not sure she has seen me backtest before. That's why I did this backtest. So what you do is, if you create a setup like, okay, this one, let me show you this one. This one is very easy. That's I just want to show you quickly. This is JPY. Sorry, yeah, GJ. So let's go to 1 week. If you come to 1 week, you can see clearly. So all you need to do is just draw the line. You can see it's a clear trend line. Okay. So what you do is a very simple strategy. Just draw a trend line. Because if you look, price is resting on the line for a long time. So when you come to you can cut it from here, cut it from here. Then go to 24-hour time frame. That's the lower time frame becomes your entry time frame. You will now play it. Each time price gets in the line is your liquidity. Whatever price does in the line becomes your entry point. Your take profit is the next high. Take note, the next high is your take profit. So each time price comes, okay, look at that. A break of structure, okay. There's no change of character yet. So let's hold on a little bit. There's a change of character now. Break of structure, change of character. So let's see. You can actually go in from here. You can go in from here. Let's see if this will play out. Then I said your take profit should be on the next high. The next high should be around here. Stop loss should just be around here. So let's see. Let's see how this plays. If it plays well. So it hit stop loss, right? It didn't play as expected. So that's because our confirmation was wrong. So now price is back into the line. What did it do? It got rejected. So let's watch and see. That's it. We have break of structure. We have a change of character. Break of structure. There's even a change of character here. So we can actually go in. We can go in from here, here, and we're targeting this same high, and our stop loss is just below this low. Okay, so let's see that play. It got initiated just now, and it's going to our take profits. You were scared when it looked like it was going to our stop loss, right? But that's the power of setup. Did you see what happened? It got to the take profits. This is what I'm telling you EU may do. Okay, it didn't initiate here. It went to TP first, returned. That's what we call liquidity sweep. Swept a lot of liquidity, got initiated, and went to the take profit. That's the power of setup. The power of setup tells you to watch the thing play. Someone said the screen isn't showing. Oh, sorry. I took the screen off at one point. I forgot. Sorry. That means I have to do that again. Let me do it again quickly. Sorry about that. I didn't remember I took the screen off. Sorry. So let's just do that quickly. I was supposed to have ended this class. It's Anna's question that is still keeping us here. So I want to elaborate on the answer so that I can answer many other hidden questions. So this is it. I said for GJ, it always continues bullish for a long time. The trend is usually very long trend. So this strategy I use is trend strategy. Let me name it trend strategy. Okay, let me name it trend strategy. Let me name the other one liquidity strategy so that you can differentiate between it. So when I say we're using trend strategy on this one, it will make you understand what I mean. So that means this particular pair is a trend uh, obeyer. He obeys trend. Okay. Then when I say we're using liquidity strategy, that means that particular strategy respects more of our liquidities. So let's do this. So for this particular trend strategy, the trend line is our liquidity. Okay, the trend line is our liquidity. So I haven't drawn that trend line. That is my liquidity. So if I want to get entry, I just need to go down to a lower time frame. Okay, let me cut it first and replay. Okay, so I'm cutting it from here. Then I'm going to a lower time frame, which is the 24 hours time frame, to start getting my entry. So what do? So this is assumed that trading has started for the week. I've drawn my trend line. So what do? I wait for price to get in my setup. So because you've back tested it, so you already know what to expect. So let's see. So price has entered into our liquidity zone. Then it has given me, see what I did the other time. It gave me a break of structure here, gave me a change of character. So I said this was my entry the other time, the one you couldn't see the screen. Then I was targeting this take profit. Then I said this was going to be my stop loss. Then what price did was I was wrong. Price went straight to my stop loss. It just went a little bit up and went to my stop loss. Did you see that? So that means in that case, you can actually be out on partial. So then I say, okay, wrong setup. Let's look for another one. So price came again into the liquidity zone. Then it gave me break of structure. It gave me change of character. So automatically, my entry was supposed to be just on the discount zone. So the move was massive. The move was massive. So but I made my measurements from here. So this was my entry on the last time, the time you couldn't see my screen. Then my target is still on that high. So if you look closely, you see that price is already on, so the stop loss should be just under the previous low. So if you look, you see that the take profit is already on my target. So, and I just said let's watch it play. So it got initiated, went close to our stop loss, and went straight to take profit. So this explains a lot about what I've been telling you. This is because you have backtested your strategy. So in backtesting your strategy, you're able to see that this is what it will do. So you can just take that entry, put the stop loss, put the take profit, and wait for it to play out. That's how to trade, though. That's actually the right way to trade. If you've been doing any other thing, that's not trading. This is a professional way to trade. Any other thing you've been doing is unprofessional. It's the right way to trade. The other thing is managing, of which you could say, okay, you didn't really get to my stop loss. Like this one now, I didn't get to stop loss. In managing, you can actually still be out on profits. Okay, or you can even still do it like this and say, okay, I'm going to take all the stop losses and take all the take profit. You will still be profitable. You will still. That's why sometimes I think there was a day Anna was asking me on my DM if she should leave a particular trade. I say no, take the stop loss. Take the stop loss, take the take profit. Me, sometimes I like to exit. The reason is because of the account I'm managing. I'm trying to accumulate a good number of profits that I can use to now do more risk. But the truth is, take the stop loss, take the profit. You'll be profitable. So we've taken one stop. Okay, one is break even. Let's take it as stop loss. Let's take it as stop loss. We've taken one take profit. Let's take more. Let's do 6 times. So let's use 6 times to count the winning rate. So wait for price to get back to the setup. Can you see what price is doing? Because this is a trend. So price is back in the setup. So now wait for break of structure and change of character. So you've seen that. So this is break of structure, this is change of character. So automatically our entry should just be just somewhere around here. So it doesn't even need to go far. Then our take profit should be on the next possible low. Sorry, high. Then our the next low should be our stop loss. So let's see if this will be a winning rate. So we have one loss, one profit. So let's see if this will be winning. This is two loss. This is inducement actually, but let's take it as loss. It's actually going to take profits, but it got induced first before going to take profit. It's going to take profit. Just watch it out. It will hit the take profit. It doesn't have a choice. So our problem on this entry now is our stop loss. Our stop loss was too close. So that's how we got induced. So this is a simplified entry or setup like this. You can easily judge it and say, okay, this is what I did wrong. So we are wrong now. So we are wrong 2 times. We are correct once, right? So let's do again. We're doing 6 times, right? So let's see our winning rate. So wait for price to get back into your liquidity zone. So this is why sometimes we tell you don't trade every day, because before price gets into your liquidity zone, sometimes it can take days, sometimes it can take weeks, depending on your time frame that you are trading. If you're trading on a very high time frame, it will take a long time. If you're trading on a lower time frame, let's say you did this on maybe 30 minutes and 15 minutes, you can be getting entry every day. But once you take it to maybe 2 hours, 4 hours, it may be in a week or in 3 days. So, but once you catch that entry, usually we give you several pips. So the longer the time it takes a price to get in your entry, the longer the pips you catch. Especially if you are using high entry time frames. The lower the pips you catch. So we're waiting for price to get into our liquidity zone. All right, so price is in our liquidity zone. What we need now is our confirmation. So we already have break of structure here. So let's wait for change of character. That's change of character. So we have break of structure, change of character. This was supposed to be the entry. But let's see if we can use this void. That was supposed to be the entry. Let's see. And the take profit supposed to be the next. Okay, let's see. Okay, let's do it like this. Stop loss here. The reason is I'm concerned. I don't want us to be induced again. So that means that was the entry. That was the entry. So let's delete this. We didn't take that entry. It moved. So let's wait for price to get back into our setup again. Let's get to another entry. So there are times when the entry will not be very clear. There are times it will be very clear. So that's why you see some mentors will tell you, counter trade. I want to show you how to counter trend or counter trade. It has broken against my liquidity on the downside, and it has given me a break of structure. What I need now is a change of character. If I get one, then I'll be going in. If I don't get, what happened there? If I get one, I'll be going. If I don't get, I will not be going in. So let's see. Okay, so I didn't get, so no going in. What? I'm pausing you and you're not pausing. All right, so now it's still fine. It's still fine. It gave us break of structure here. It gave us change of character here. So I'll be expecting price to return back to this point. I'm expecting price to come back to this point. But if I must take it from there, my stop loss must be below the previous low. This is a massive move. My take profit must be here. Let's see. Yeah, my stake profit must be, because this looks like liquidity swipe. This is what most people regard as swing trading. So let's see what price does. Yeah, it has hit the take profit as predicted, but I expect it to still go back there. It didn't get initiated. It didn't get initiated. It didn't get initiated. Let's see. Let's see if it will still initiate. If it doesn't, that means that entry didn't get into our entry. There are times when entries will not get into your entry. Expect it. It will happen. So in that case, don't start getting angry. Yeah, it's painful sometimes, but don't start getting angry. Just let it go. Another one will come. So this did not come. So we're letting it go. Okay. This is where we let it go. Uh-huh. So now there is a break of structure. There is a change of character. There's another entry here. So we're going to go in again. Okay. We're going in again. We can target this. Stop loss should be on this low. All right. So this should be a beautiful entry because this one is very clear. Oh, guess what? Inan King, like it wants to enter on this induced. I went up. So we are wrong. We are wrong, right? So how many times now wrong? How many times right? So this is how you check your winning rates. How many times wrong? How many times right? One time right, one, two wrong. This one did not enter. Three wrong. So out of four, we are wrong three times now. We're right only once. So what do? You try again. That's how trading is. Trading is not as easy as you think. You just have to keep trying. So now we were wrong three times, right one time, right? So we're getting another entry. Let's go. All right. So we already have break of structure, change of character. This will be the entry. This will be the entry. No matter what, just stick to this. This one is very clear. No matter what happens, just stick to it. Let it take profit be on this. Okay, no. The stop loss will be here. The take profit should be, it should be here. Okay, it should be here. The previous high on the previous historical movement. Okay, so let's see what price will do there. So this one, if you catch this one, so this is what happens. There are times when you just find a massive move. I mean, you catch that massive move, it now covers all the losses you've been having. So let's see if this is our move. Okay, let's see. Yeah, initiated. Let's see if this is our massive move. Initiated. Close your stop loss here. All right, so we're out on BE. We're out on BE. So this was not our massive move. So, but expect that massive move to come. Anytime you see such massive thing, expect it to come. Um reason is because it's not coming now because a lot of people are targeting it. So it needs to grab enough liquidity from them before moving. So just watch. We're still wrong with that one. So let's say we're wrong 5 times now, right once. So just watch what will happen now. I'm going to get it now. Okay, so I have it already. I've seen now it has grabbed full liquidity. So it has given me my break of structure. It has given me my change of character. This is my entry. And I'm going massive to that target profit. And nothing will make me close. This is something I want to teach you to learn. So that if peradventure you have six, you targeted six, like you can see, we've gained only we've only won how many now? We've only won one. And then you now see an opportunity like this. The winning of this opportunity can give you a massive move that will cover the other ones. So let's see how this plays. So for me, it has grabbed enough liquidity. So let me see what it does. So you can see how that you try, you were wrong, you try, you were correct, you tried, you were wrong, you try, you were correct. So some of you just expect that all of them will be correct. No, all will not be correct. So you see, this is correct now with massive move. This is a clear move, clear move. How did I spot it? I spotted it here, but I have learned from experience that anytime it does this, what it means is that it has not grabbed enough liquidity. So if it once it takes out everybody, it will make the move eventually. And that was what I now capitalized on. I do that a lot when I'm trading, and that's where the massive profit comes. So now how many times are we correct now? Wrong 5, correct 2. Let's do it 10. So what happens is when you find out that you are not winning many times, you increase your chances of trial, because the more you try, the more you win. So this entry is done. You see, it's still going. I knew it was going to be a massive buy. It's still going. But don't pursue it again. Wait for price to come back to your setup. You'll find another entry. Don't pursue it. I knew it was going to be a massive buy. It's still going. It's usually like that. After after liquidity sweep, there's usually a massive move. Take note of that. After every liquidity sweep, there's always a massive move, whether bearish or bullish. Don't pursue the candles. Wait for it to get into your setup. Is it in our setup? Yes. Yes. What did you see? Break of structure, change of character. So break of structure, change of character. We can go in from somewhere around here. Then take profit should not be far for this particular one. Take profit should, take profit should not be far. It should be on the next high, which is this. Then stop loss should be just here. Stop loss should be just here. I'm supposed to have checked and GU and EU for New York session. So let's see how this plays. This is just small. This is a short move. Do you see that we won this one? So how many winning now? We've won 3, right? 3 winning and 5 loss. So it's still 2-0. So we have to take more because I want the winning rate to be higher than the losing rate. So let's wait for price to return back to setup and then we go again. So wait for price to get to set. Don't chase candles. Don't just enter. This is one of the things that will make us know whether you're a professional or you are not a professional. When you just enter, we know you're not a professional. You must have a setup. You must have a strategy. And price must get in your strategy. Price must get in your setup. And until price gets in your strategy and gets in your setup, don't take that trade. Say, oh, but I just want to trade. I need money now. No, don't trade like that. See, this is massive. Massive buy. Massive. You should be able to know what is massive now. These are voids. You can see what are called voids. Voids are when price repeatedly keeps going in a particular direction for a long time without retracing. Is a void. And normally, part of the rules of trading is that price always goes for voids. Price always goes for voids. So this will be massive. So it gives us break of structure. Break of structure. It doesn't give us change of character. Let's wait. All right. All right. All right. All right. So, but now, all right. Okay, let's see. Let's see. I think this will go. This will go. So, but stop loss should be here. That's the only way this can go. Take profit should be here. That's the only way this can go. And this can be a massive move. So let's see. So let's see. It's a massive move. It can cover up for several losses and give you massive profits. So if you look very well, you see that trend line trading is very simple, very easy. Makes trading easy, makes trading simple. Okay, so we're now in current time. So that's why it stopped. So that means we didn't go very far. I wanted us to keep back testing and going. So now, how many win now? Let me even see. How many win? So we have 1 win, 2 loss here, 3 loss, 4 loss, 4 loss, 2 wins, 4 loss, 3 wins. I think this should be a win. 4 loss, 3 wins, right? 4 loss, 4 wins. So if you look at it, you see that it's 4 loss, 4 win for what we have done so far. Because of time, I'm thinking of closing this live. This is the first time I'm doing 2 hours. I've never done 2 hours before. I usually do 1 hour. But it's good, especially if people are learning something. is good. So to close this live now, you will see that we have 4 losses, then we have 4 wins. What it simply means now is you are profitable. How did I know? If the 4 losses are 20 pips, that's how many? 20 times 4 is 80. If your RR is 1 to 1 plus something, what it automatically means is that you've lost 80 pips. Now, if your 4 wins are 20 pips per adventure, it means you have gained 80 pips. So 80 loss, that's 80 pips loss, 80 pips gain. 80 minus 80 is what? 0. No profit, right? So that's why we tell you your RR cannot be 1:1. So if your RR is 1:1, it means that what you lost is also what you gained. And when you remove from what you gained from what you lost, you are 0. Your account did not grow. But if your RR is 1:1 greater than 1, maybe 1.1, 1.2, like that upward, you observe that, having done the maths, whatever is added is your profit. So that means you're profitable. Do you understand that now? So I haven't looked at all these other massive moves. Let's say this one is 30 pips. Let's say this one is 10 pips. Is that not 40? Let's say this one is 60, because this looks like 60 pips. Is that not 100? Then where's the other one we won again? There was another one we won. I think it's here. Then let's say this is 40. That should be 140. So let's say you got 140 pips in profit. By the time you remove 80 pips loss, you'll find that you still have 60 pips profit. So your profit is not 140. Your profit is not 80 pips. Your profit is 60 pips. That's how trading is. That's how business is. So a lot of people come into trading. They don't relate until you relate trading as business. You can never be profitable. In business, there's profit and losses. When you come to trading, you do the same thing. You calculate your losses, you calculate your profit, you do the maths. The difference is your gain. I was talking with someone was chatting me up, I think on Saturday, and she was like, she's interested in learning. So I was like, okay. So I want to know how to guide her. So I said, okay, what do you want to learn? She said that she has learned the basic. So I said, okay, fine. So to know whether she has learned the basic, I said, okay, how much have you made? Have you made money from the basic you learned before? She said, yes. I said, okay, you've made money from the basic you learned. Then what do you want to now learn now? Because if you've made money from what you've learned before, you don't need to learn anything. She now said, but I have lost money as well. How can you say you made money when you made a profit of $500? You now lost $2,000. You didn't make money. 500 minus 2,000 is 1.5. You lost 1.5. That's how you should be doing the math in trading. You can't say you were profitable because you made $100 last week. You now lost 1,000 the following week. That's 900 loss. So if you remove what you said you gained from the loss. So I told her, as long as you cannot subtract your loss from your profit and still have money or profit, you are not a profitable trader. So you have to look into your risk management. You have to look into some people think they know what is risk management. You know what is risk management, you're still blowing accounts. You don't know what is risk management. So you look into your risk management, you look into your risk to reward ratio. And once those two things are correct, then you look into your win rate, your strategy, and your setup. You are good to go. So, and that's what we're going to teach you. So she said, okay, so how do we go? I said, start with 1 month trading plan. So I haven't taught her for a month. She can now check if, so she don't feel bad. Oh, she has paid before in another mentorship. She has learned the basics and she's still losing money, So I said, do 1 month. So if you do 1 month, I can tell if you are good to go. If you're not good to go, I'll tell you to do another 1 month until you get it right. Isn't it beautiful to have someone tell you what to do? Some of us didn't have anyone to tell us what to do. But here we are. We're doing it well. We're making money in the market. You that have someone to tell you what to do, take advantage of it. Okay, so the only thing I've not spoken about is moving average, right? So next week, time is far gone. It's 2 hours 14 minutes. The reason why I chose not to talk about moving average right now is because I don't even have it on my chart. Okay, so I chose to just talk quickly on the one I have on my chart, like Dr. Kamau's question on SMC price action, then Anna's question on the strategy I'm using, the name of the strategy I'm using. I think she asked only the name of the strategy I'm using. Okay, she said exact. She's a very smart woman. She said exact. So, and I've given you exact. I'm a very smart teacher too, and I've given you exact. So somebody doesn't say he doesn't want to teach his strategy. I've taught it to. I'm only still saying you should go and watch the VIP mentorship course 3.0 for a more elaborate example, because I've given you elaborate explanation. Imagine how many minutes I took to backtest this strategy to show you a few things. So, but VIP mentorship, I think 3.0 and 4.0 will give you a more elaborate examples. So, thank you all for joining in for today's live trading session. I'll be looking forward to having you again next Monday, same time, 1 p.m. GMT +1. For those of you in Abuja, like Anna, I know you're in Abuja. From February, once we start the physical training session, I would love you to come around maybe 1 or 2 times, okay? So that something one-on-one does that online cannot do. From February to make out time, come around with your laptop and put you through a few things, and it will perfect your trading journey. I'm talking to her like this because she's a VIP subscriber. In case there's someone who is in a free subscription and you're thinking you have that same privilege, no, you have to pay to enjoy that this thing package. She paid, that's why I'm speaking that language to her. Okay, so watch out for weekly review on Friday. It's very important. Weekly review helps you to review what was done, okay, and prepare for a new winning week. Then I wish you all well for the new year. Thinking of doing a new year giveaway for all who have patronized KFC trading. So we're going to send you a message on that. You send us a DM so we can give you a new year giveaway for the new year 2025, and to appreciate you for being a part of our services in 2024. So then I think that's all. The next will be weekly review. And then, okay, the VIP mentorship course starts 1st January. Please don't forget, 1st January. And it will end on the 7th of January, of which 8th January will be the first virtual graduation ceremony and party. And there will be an award session. So we're going to be thanking everyone who's been part of our journey. Best student, most compliant students, and all. Okay. So watch out for that. Watch out for that. I think that will be, yeah, I think that those are the things on our schedule so far. Are you ready for 2025? I am ready. See, make your visions big. I'm telling you, it doesn't matter if you've been blowing accounts. When you're writing your goal for 2025, please put $1 million. If it's not up to $1 million, go and change it. My mentor, my teacher, my life coach, Reverend Dr. Chris Akilome, he will tell you any vision and goal that is not big, God doesn't want to be a part of it. Anna, you as a person, you can raise 10 million naira on your own. So don't put 10 million naira as your goal for 2025. Put $1 million, because you on your own, you can raise 10 million on your own with your brain, you have that brain, you have the capacity. But God is bigger than you. Choose a goal that God can be a part of. I see. That helps you, okay? Because now you are living your ability to focus on God's ability now. It doesn't stop you from raising your 10 million if that's what you're looking at. But let God be a part of your vision. Let God be a part of your goal. That way, you can now increase yourself. You can increase your capacity. So instead of doing 10 million, you're doing $1 million for yourself. And even if you don't hit it in 2025, it's not a problem. The vision is important. If it does not come accomplished in 2025, 2026 is still there. So, but what will happen is that you must have gained enough amplitude that will help you run towards that direction in the following year. What am I saying? It's just an illustration. I'm only saying that All of you write big goals for 2025. Don't write small goals. Don't write small goals. If you write small goals for 2025, you're not ready to succeed. Write big goals. Big goals. Before I started KFC Trading Academy, it was in a goal. And it was a big goal. I kept writing it on goals before it started. And look at it. Physical centers are launching already. And we're already talking of physical centers in Europe because it's a goal. And these are big goals. And it's not me doing it, it's God. Okay? Mine is just to see. He said, see as far as your eyes can see, that He will do it for you. So if you are writing goals and you're still writing $1,000, $10,000, sorry, you're making a big mistake. Write from $1 million and above. $1 million, $2 million, $10 million, those should be your goals. In fact, me, as I'm even talking to you people now, I'm provoked. If my students and mentees' goals are now $1 million, what should be my own goal? Because I think I wrote 2 million. I have to go and review it. Because if my students and mentees are now writing 1 million, me as the teacher or the leader, I should go and now write 10 million or 20 million. That's what it should be. The goals should be big. Now, people don't understand that principle. What do you think is world richest man's goal? When Tesla was crashing in 2015, you think his goal is small? His goal is big, and that's what he has achieved. That's why he's the richest man on the planet. But if his goals were small, when Tesla was crashing, Tesla would have crashed. Go and read about the history of Tesla. Go and read about the history of Elon Musk on how he became world richest man, the richest man alive. Go and read about it. Go and read his difficult times and how he broke through in 2016. You understand what I'm saying? He had a vision, he had a goal. He had a vision, he had a goal, and his goal was big. His mind was focused on something big, and he was able to achieve it. If your goal is big, if your vision is big for 2025, you will achieve it by the power of God's Spirit. So that's my desire for you, and that's what I wish you all for 2025. Have a great year, enjoy yourself, make money, live big, live large. Let it be said that in 2025, Alex was successful in trading, Anna was successful in trading, Dr. Kamau was successful in trading, and all of you. I may not know who is on this live video, except I see your comments. So, all of you on the live video, be successful in this 2025. See you next time, which will be the weekly review, right? Until then, keep winning, keep back texting, keep learning. Let's go back to the channel, free channel, VIP channel, and I'll be bringing you signals and telling you what to do in the market. Stay tuned. Enjoy the rest of your day. Bye.